Hi, it's Steve and Joe from Freshagenda. And Steve, we're here this week in the middle of war in Europe and floods in half the country here in Australia. But we're still giving our updates on global dairy markets because they never sleep.
No, they don't. It's actually not too bad right where we are, but just a quick overview of the major issues in our outlook this time.
So that just went to subscribers this week, our latest update?
Went yesterday, and some of them this morning. Depends where they are. A wrap on the another stunning GDT result and an overview of something we've just produced. And then, of course, the stunning chart of the week that Joe's come up with. Okay, so, we wrestled with how to couch the front page of this outlook this time and how to best describe. We're almost to a point where fundamentals are, yes, they're very interesting, but they're not really driving things because we're at extremes. We've got this tightness that has been there for some months, and it just seems like everything that occurs, or all the indicators that are moving, those parts that are moving, are increasingly bullish for values.
It just ratchets up, doesn't it?
It does. So at some point something's got to give. So we do kick around in our paper, and we do quite a bit of analysis on some of the scenarios that might apply. But is there a seasonal milk lift coming in Europe and the US?
It looks hard, doesn't it?
It's really hard. Yeah. In both cases, US put some interesting production numbers out recently, which were much worse than expected. And then when you look in the background as to what's going on, and that whole drought situation in the southwest, the lack of water in California, that's going to kick in, and already is kicking into yields. So that recovery is troublesome. I think the other thing to think about is we are seeing fluid milk consumption fall quickly, particularly in the US. So that helps manufacturing volume.
Sure.
That may, as people come back to eating out more of their typical eating patterns or eating and consumption patterns, that may help. But then you go to other things in Eastern Europe, that the embargoes that are going to impact grain, they're pushing up energy prices, fertiliser prices are going higher and higher. Makes it much harder to produce pasture and crops. In that case, on the right hand side, there are rising costs of living not yet reaching most consumers. So if we look at the comparison between PPIs and CPIs, there's still massive daylight there. So when that rocks into household spending, we're going to see some pullback, we think. There's no sign of that yet.
No, but it's like a slow-moving flood almost, isn't it?
It's glacial.
It's across everything. There's a lot of talk about energy, but all costs of living are being affected by what's going on at the moment. So we think a bit of dairy demand will be hurt. There'll be trading down, and there'll be some of the higher end that will be burnt off. In developing markets, we haven't seen that yet. But we have seen, certainly with rising butterfat prices, we have seen some of that for some months. But really there's the trade that's historical, and we'll talk about that in a minute, the high prices haven't really reached that data yet. That's right. And the other thing, I guess, in terms of fats, is the substitute prices are also very high. So, the ability to actually substitute away from dairy fat is tricky.
Ukraine built up to be a significant, 60,000 tonne market, and when you translate that, that's quite a bit of milk powder, potentially, that might end up there because that cheese market looks like it will be damaged for some time. And then there's this long story about China's demand slowing down and then milk growth rising. So that should start to burn off, but let's look at GDT and find out how scared people are of that. Anyway, 303, it's an interesting number really, because it's like a gunshot. Just a bit of background.
It's calibre, isn't it?
It is. It's calibre. There was a reduction in whole milk powder offer volumes again because of the fall in New Zealand milk, so those volumes cranked down. And I've just compared there what's happened since the start of the season. All right, in June, when that forecast was still prevailing, and what we've seen last week. And that's just whole milk powder. So 64,000 tonnes decline in sales and what's yet to come. So some of that's actually happened. Quite a bit of that's happened.
It's a significant tightening of availability on that platform, isn't it?
Yeah, it's when you look at the milk production effect, because milk production might be down 5% yet. that explains less than half of that fall in tonnage.
So the other part is a lot of off-platform sales.
Yeah. And maybe a bit of mix change because of skim milk powder and butter being far more attractive, particularly in the second half. So, but that's the thing, and the volumes on GDT are falling quickly.
Yes.
So that's in the background because that means while the demand might still be there, the volume available means the mechanism works harder and pushes prices firmer.
Sure.
So a fairly stunning event across the board. I didn't see any contracts falling again. Cheddar was just crazy. And that's moved, as you can see on the right-hand side, $2,000 a tonne, more than the US CME, even forward prices.
You do get strange cheddar results on GDT, don't you? Because the volumes are still small.
Yeah.
So, but yeah, that's amazing.
Yeah. The other highlights, and there were many, but I've just pulled out a few here to keep our viewers interested. We've seen the reversion back to a strong premium for New Zealand product.
Sure.
New Zealand product jumped quite a bit. European and US product hardly moved, which was really interesting. And then with fats, both AMF and butter are a bit over $7,000. But when you take the fact that there's a little less fat in butter, it's the worst premium or the worst discount for AMF that we've seen. Speaking of records,
a few more awards this week, Steve.
Yes, a lot of trophies given out this week. The highest ever GDT index in the longest rally of any product, the highest cheese price, the highest butter price, and AMF price at C2, and the spot milk value is nearly $12 a kilo in New Zealand. So we're in crazy times.
Yep.
And there's the comparison. That's why that's there, because we're at a fairly strong lead from whole milk powder. The milk price estimate in New Zealand the midpoint got put up to $9.30 this week.
That's
Futures are currently thinking that's going to go a bit higher. And if you look at that, the weight of where that line is above the average, you probably think so too.
Yeah, fair bit of headroom there.
Yeah. Demand was quite strong across the board. A few little interesting graphics here. Just looking at whole milk powder, even though that's a pretty strong demand, it was actually on trend when you look at where the trend line is for the strength of demand and the price rise. So that happened as it probably should. It's quite normalised. When you look at what's occurred, and I don't want to do this across the products, but this is the most interesting, I think. You had very strong early demand, which pulled it up. And you see those early rounds where the ratio of available demand to product available was very strong, and that was the momentum needed to lift. I could bore you all with lots of these, but I won't.
Let's not.
North Asia is buying far less at this time of year, so it wasn't just about China.
Yeah.
This is about several regions. China did step in and buy a little more skim milk powder as the volumes fell as well. But there are other regions dipping in. So this is, it's got some widespread support. And that's what that's what's interesting at this time with those heady prices.
So a bit of history now, Steve, and this is where Steve gets to nerd out with his annual trade data.
Yeah, I love doing this bit. So does anyone remember 2021?
No, vaguely.
That was before the month of January, of course, which just goes on forever. So we've published, and it's coming out to subscribers and others and interested parties, and if anyone wants a copy of this, we'll give you this for free. It summarises what occurred in 21 and pulls out some major trends across the board, and we can see what happened to total trade shares. We measure things in milk solids equivalent, which is a little more accurate than milk equivalent. We've got some interesting changes in market share to talk about.
Sure.
Commodities into markets and into particular categories where there's shifts occurring. We analyse what's happening with the major exporters, who's hot, who's not, and then some trends into the commodities themselves, what changes are there, how trade is made up, what shares there are in those segments, and what gives an insight as to what might happen in the 22 year. And it goes down into country level to look at, where are the biggest gains being made, who's got what shares of those markets, and what's changing. So it is quite a comprehensive read. These are just the very high level charts from that. As I said, if someone wants a copy, get in touch.
Yes.
Chart of the week, Joe.
Chart of the week. Well, just to speaking, as we were earlier, about the supply tightness in the world, New Zealand came out with their January data, and it was another month of production falls, and we know it's going to be pretty tricky or tough to beat comparatives for the next couple of months, because this time last year was very good in New Zealand, but still significant that milk production's tough there. They've had a very hot, dry January in most of the country. And I guess, farmers looking at drying off a bit earlier, preserving what they have. They have had some rain, so as with New Zealand, always with New Zealand, it can turn around quickly, but certainly interesting times, Steve.
So the expectation is we're still going to see some big negatives for the next few months. Just how much of that is and where it is interesting, because there's quite a weird-looking soil moisture map now.
Yeah.
Okay. Well, that's a big wrap from us. Thanks for watching. We'll be back in a couple of weeks' time.